Is the stock going up, down, or sideways? For a technician, this might be the most important question. But what might a trader look for on a chart to identify the trend? Let's explore it. Good morning. Welcome back, everyone. It is Monday morning. It's 11 o'clock Eastern Standard Time. That means it's time to get back into our ongoing series of 8 lessons relating to getting started with technical analysis. And today's focus is on trend identification. My name is Cameron May. I want to welcome you here for about a 30-minute discussion of looking at charts to identify trend. We're going to be looking at 2 different ways that a trend might be identified. One requires some traders' discretion. Another is very automated. So it'll be entirely up to you and your style for your technical analysis of your charts, but we're going to explore both of those. Let me say hello to you returning veterans, Julie and Scott, Guillermo, Alfred, Pierre-Paul, Michelle. Always great to have you returning veterans on board. This is going to be taught kind of at a beginner level. So this is the right place if you're just getting your feet wet with charting. If you feel like you need a little bit more advanced view of technical tools and resources, you might want to check out a class on Fridays, 2 o'clock Eastern Standard Time. It's called Advanced Charting Techniques, and that's taught by, I believe, Mike Fairborn. All right, but hello there, Diane. Great to have you. Well, let's try to get the most out of our discussion today. Let's just dive straight into it. First of all, we're going to pause to consider the risks associated with our investing. Then we'll set a specific agenda for today and proceed from there. All right, so options are not suitable for all investors. Spreads, straddles, and other multi-leg option strategies can entail substantial transaction costs. Past performance of any security or strategy does not guarantee future results or success. All investing involves risks, including risks of loss. We are going to be using real examples in today's discussion. Please don't take that as a recommendation or endorsement of the securities or strategies discussed. The usage of a stop order is not a guarantee that you will buy or sell at a specific price. And for those of you who do use options, there's a quick overview of your Greek, so you may want to acquaint yourself with those definitions if you haven't done so already. Let's see where we are in our 8 lessons, though. We are on lesson 3. So far we've covered an introduction to technical analysis. Then we spent half an hour on understanding how to set up your charts. Today is all about trend identification, though, and then we'll proceed from here. Next week will be support and resistance, just to set the stage there. So what exactly are we going to be doing today? Today we're going to learn to identify common technical techniques for trend identification. This includes an expansion of the Dow theory concepts that we covered in lesson 1, and we're going to employ what we call moving averages. Then we're going to apply those concepts on multiple charts in multiple time frames so to give you some repetition with these brand new concepts. So hopefully by the accomplishment of those 2 agenda items, you come away from this discussion feeling much more comfortable when you bring up your next chart and you're trying to identify whether that stock is going up, down, or sideways. You have a little bit clearer vision. That's the hope for today. All right, so let's go right to our trend identification. Now, this chart should look familiar from lesson 1. We discussed something called Dow theory, or the Dow theory of trends, which was introduced by Charles Dow, closing in on 100 years ago. And it was his observation in his efforts to identify the current trend of prices, and he applied the assumption that if a trend once established is likely to continue, if he could identify that trend, conceptually he was looking for a better understanding of where the stock price may be headed from where it is right now. And Charles Dow noted that the trends tended to move in little cycles. Instead of just going straight up or straight down or straight sideways, they would tend to move in these little cycles, making a zigzag pattern or a stair-stepping pattern in his mind. He did not have the benefit of the charts that we have now, but he noted that stock prices would generally work their way up for a while, maybe a few days to a few weeks, and then they would come down for a while, maybe again a few days for a few weeks, establishing high and low points. And what he noted was that he might be able to identify a stock's overall trend if he kept track of those cyclical highs and lows. And if subsequent highs exceeded the previous highs, and if subsequent lows exceeded the previous cyclical low, that might identify an upward trend, at least in that Dow theory of trends. So here we have an example of higher highs and higher lows. And I think it makes it easier to visualize this when you have a theoretical representation of this concept. Here we see consecutive higher highs. We have consecutive higher lows. And according to the Dow theory of trends, as long as you have at least one higher high and one higher low, we now have at least an emerging trend. And the more higher highs and higher lows you have, the more established the trend. So let's go get a real example of this in today's markets. And actually, we might look directly at the market itself using the S&P 500 index as a stand-in for the stock market. Let's take a look at what stock prices have been doing generally. So as we go to our Thinkorswim platform, let me minimize this left column where we're not going to really need that. There's a little hide toggle right here. If you haven't done that before, you can click on this little the arrow right at the margin and reveal and hide that left column. But you'll notice, look at the last 3 months of the S&P 500 behavior. I'm going to zoom in on that, and if we apply this Dow theory of trends, you'll note, hey Chuck, it's going well, thank you. Yeah, Monday morning I always feel bright and shiny and focused. It's great. But you'll notice the day after Christmas was the recent market low. That was the low point. And since then, the S&P has been in a period of recovery. Now, that doesn't mean that every single day we've been seeing one white candle after another with prices advancing every day, but there have been ebbs and flows in prices. And each time we get that pull back, a technician might hit a little bit of a panic button and wonder, well, is this the start of a new downtrend? Well, as long as those highs and those higher highs and those higher lows are intact, according to the Dow theory of trends, we have still an intact upward trend. So look at these peaks and valleys, if you would. S&P rallied up and then pulled back, and as it pulled back here in early January, you'll see that that low was higher than the low established the day after Christmas. And in between, we had a high point. We rallied up to a new peak that exceeded the previous peak, so we have a higher high. At that point, a technician might say that according to Dow theory, we have an upward trend established. And then we've had higher lows, higher highs, higher lows, higher highs ever since. And even today, if you look at today and you look back to last Friday, it looks like we're pressing up to yet again higher highs. So the S&P itself is showing this higher high and higher low pattern. So at least from one technical perspective, we might say that the S&P has an upward trend. Now, individual stocks, to a large extent, a lot of stocks are following this. If we look at, let's have a look at Moody's. You'll see a very similar pattern starting right about that same time. Let's zoom in on that time frame. Higher lows since right around that Christmas holiday, higher highs, and just again today, peaking up to a new high. And finally, one more example. How about Cummins? Cummins was a stock that was really kind of stuck going sideways. And you wonder if that's going to go on forever. Well, more recently, we have some highs and lows that are stretched out over longer time frames. So I wanted to point out that it's not always just a few days up and down. Here we have a stock that travels up for several weeks and then pulls back. Then it travels up for several more weeks and then pulls back. But still, overall, the same concept. So there is an uptrend. What about a sideways trend? What is that? A downtrend. Well, a downtrend is just the inverse. That's where we have lower highs and lower lows. So conceptually, this might be what we're seeing. Moving through these cycles, hitting lows, rallying up to peaks, but each subsequent peak fails to come back up to the previous high. So the momentum seems to be carrying the stock downward, and while that's conceptually easy to describe, sometimes in real life it can be a little bit more difficult. So let's look at some examples of that, and we're going to switch up our time frames here. Let's go to a weekly chart to see that these concepts could conceptually be applied on different time frames. I'm going to come up here to our daily, and navigate over to maybe a weekly chart. And how about we switch to Northrop? Alfred, hey, appreciate your concern. Can anyone tell me what happened to Coach Scott Thompson? He's still around. I sit right next to Scott. I see him every day. He just has a different role now. You may have seen him during our education day. He did one of our presentations there. But I'm going to zoom in here. Yeah, Scott's management now. Yeah, big boss, right, Chuck? All right, so here's what's going on with Northrop Grumman. Northrop Grumman hit a peak back in April of last year, and for several weeks pulled back, hit a low, rallied up going into June. So notice we've stretched out over about an 8-week period now from this peak to that peak. But we had a lower peak, lower high, pressing down to a lower low as we head into late July. And then you see that pattern continue, lower highs and lower lows. So the question is, can this concept be applied on a longer term time frame? Conceptually, it can. All right. Could we look at a shorter term time frame? Could we look at a 1 day, 1 minute chart, or a 5-day hourly chart, or something like that? Conceptually, we could. This trend identification concept applies. Well, there's one other trend. We've looked at lower highs and lower lows. We looked at higher highs and higher lows. Might as well give you one more example of a downtrend here. Here's FedEx. Hit a peak. Was that around that same time? That was January of 2018. And it's been making lower highs and lower lows on this weekly chart, at least in one technician's view, since then. And you can see it's attempted a recent rally. And as it rallies, maybe a technician is asking themselves, boy, is this the start of a new upward trend? Well, if you're looking at this, let me ask you this. If you're looking at this on a weekly chart, would you say that this is a new upward trend? Maybe not. Because in order to have a new upward trend established, we'd have to see a higher high and a higher low. At least one higher high, at least one higher low. We don't really see either one of those. All right? So that's a downtrend. What about a sideways trend? Conceptually, I think we might make this logical extension and say, okay, so a higher high and a higher low is an uptrend. A lower high and a lower low is downtrend. So it must be equal high and equal low for a sideways trend. And you can see that this slide actually defines it that way. But if you look at the actual highs and lows, you'll notice, wait a second, this is not a precisely equal high. That's actually a slightly higher high. And if we look at these lows, sure, they're in the same neighborhood, but they're not exactly the same. So equal is kind of an exaggeration here. Occasionally, you do get stocks where the highs and the lows are exactly equal. Let's say you have a stock that's trading between $40 and $50, just to exaggerate things, and it happens to come down to $40 right on the nose, and then rallies up to $50 right on the nose, and then repeats that right down to 40, right back up to 50. Conceptually, that could happen. In reality, that is rarely the case. Usually what you wind up with are similar highs and similar lows. Well, that is one definition of a sideways trend. Equal highs and equal lows, or a second definition, similar highs and similar lows. There are any number of, not any number, I suppose I could number them if I sat down and figured it out, but really any combination of highs and lows other than higher highs and higher lows, or lower highs and lower lows, might be defined as a sideways trend. So what if we had higher highs but lower lows? Well, net, the stock isn't accomplishing much. It's going sideways. That's a sideways trend. What if we had lower highs but higher lows? There's a contraction of the price range, but we're still essentially going sideways. What if we had higher highs but equal lows? Or lower highs but equal lows? Or higher lows but equal highs? Or lower lows but equal highs? Well, I think you can see that there are a number of other combinations of highs and lows, the net of which produce a sideways trend. So let's go see this in real life. And Chuck says, how do you tell when a trend is changing, not just a bump in the road? It's tough, right, Chuck? Because you might recognize, let's say you have a downward trending stock and then you have 3 up days. You wonder, well, is this the start of a new upward trend? and maybe you watch it and it makes a higher high and a higher low, at least in your interpretation, and then the stock just sags and continues on down. Is that possible? Sure it is. Yep. Yeah, these are technical principles that are employed in an effort to gain a market edge, right? Does that mean that they're guaranteed to deliver a market edge? Not necessarily, not in every case, right? Well, let's go back to the stock examples here. I'm going to switch back to a daily chart and look at some examples of sideways stocks. So let's look at BIIB. Say, here's Biogen. This is a good example of a stock where there are some examples of relatively equal highs and relatively equal lows very recently, but you'll also notice there was a period where we had equal highs or similar highs, but lower lows. And then we had similar highs, but higher lows. So again, any combination of highs and lows that doesn't fall into the definition of an uptrend or the definition of a downtrend may be considered a sideways trend. All right, there's Biogen. I think that's a good example of how you can get a mix of those highs and lows. Here's Grainger. Grainger is kind of a better example of pretty similar highs and lows. You can see back here in October, moving into December, pretty similar highs, and then even into February. Highs quite similar, lows quite similar. There's a potential sideways trend. And Chuck, here's maybe an example where you see, wait a minute, are we really going sideways anymore? Might we call this a higher low? Possibly. Would that reclassify this as an uptrend yet? No, that's only a higher low. We need a higher high to go with that in order to call that an uptrend. So I would still, at least in one technician's point of view, see this as a sideways trend, an intact sideways trend. One more example of sideways, and that is RE. I didn't draw the lines in because I want you to be able to look at this through a fairly fresh set of eyes and see if you can identify that, oh yeah, we had, for example, here was a lower high right there, but then we had kind of equal lows. We had a higher high that snuck in there. We're getting a mixed bag of highs and lows again. When you see that playing out, the general trend that plays out tends to be sideways, right? That's what we're seeing very recently. Once again, here's where, Chuck, you might, a technician applying their discretion might say, well, Cameron, don't we now have higher lows right there? Yep, maybe. Don't we now have higher highs right there? Yeah, we might have a short-term uptrend that's contained within a sideways trend. So at what point do we now say, okay, well, the short term has overcome the sideways? We need to talk about that in future lessons. All right, now, what we've been discussing so far in the application of the Dow theory of trends requires your own discretion. You bring your own experience to identification of highs and lows and the identification of trends. But some technicians don't like that. What they like is for things to be a little bit more black and white. They're willing to surrender their experience to just have something that makes that ultimate determination for them. And consequently, indicators have been created in the effort to, let's say, automate things. And one common indicator is known as a moving average. All right, so I'm going to grab another stock. Let me come over here to our watch list. How about we look at our watch list of S&P 500 companies, and we're going to, well, let's just sort of scan down through here and click on a symbol. All right, let me clear up this drawing set. Now here's a stock that appears to be pretty clearly upward trending going from left to right. Now through that, it's had some sideways behavior. Here's a period where we had higher highs, but we had lower lows. That's kind of sideways. I'm going to apply an indicator to the chart that is sometimes used to identify trend, and it's known as a moving average. So let me put that on the chart and then I'll explain how it's constructed. So I'm going to come up here to our little beaker icon as we talked about last time. I'm going to click on the Edit Studies, and I'm going to use the word simple in our keyword search. If you're struggling with this navigation still, you may want to go back and watch last week's presentation on setting up a chart. But I'm going to add a simple moving average to our chart. Let me click Add Selected and click, actually let me edit this just a little bit. I'm going to use my little gear icon. As we discussed last week, you can use that gear to edit studies that you've added. I'm going to click OK and click Apply. All right, so if we look at this chart now, we have a line that's moving through all of this price activity. And that line, one of the potential interpretations of that line is it is pointing the direction of the current trend. Well, that may be helpful, right? Because there are certainly times. Let's look back here in June of last year. To go back to Chuck's question, how do you tell when a trend is changing and not just a bump in the road? Yeah, Chuck and everyone else, if you can imagine, back in May of last year, we had a nice little run here on Avalon Bay. And then you have this pullback that lasted for about 2 weeks, week and a half. Do you think there were any investors in Avalon Bay that were wondering, wait a minute, is this the beginning of the end for Avalon Bay? Has the trend changed in a significant way? Well, according to this trend indicator, this moving average, not really. You'll notice it was still pointing up, and so an interpretation there might be still an uptrend despite this pullback in price. So that's where this sort of an indicator may hold some value for a technician, might give them some patience through the sort of choppier periods of a chart. But how is this line constructed? Well, it's known as a moving average, and what it does is it takes the average closing prices for a period of time that you choose, and it puts a dot on the chart. So like, let's say we wanted to know the average closing price of Avalon Bay over the last 50 days. Well, actually, as I constructed this moving average, I chose 50. Do you notice that here? I know it's jumping around, but right up here near my cursor, it says 50. Well, I chose a 50-period moving average. Now, the period that we're using right now, this is a daily chart, so what we're looking at is the average price over the last 50 days. And I know that that average price is $190.50. Do you see that number right over here in green? It just changed a little bit because the markets are still open and that average is still changing. But what this tool has done is it calculated the average price over the last 50 days and it put a dot on the chart. But it didn't do that just for today. It did that for every 50-day period for the entire time frame of this chart. So I could go back to this July period and I could look here and see, okay, so the average price then was about $167.50 just by looking at that line. I could say, as of July 18th, looking back over the last 50 days, the average price was $167.50. Now, as that average changes, and that average changes quite gradually, that may give me some insight into the current trend of the stock. If average prices, generally speaking, are going up despite day-to-day bounces in value, then that may give me a clearer view of the current trend of the stock. And you can see that very recently, average prices have been coming up. Now, we certainly, there may be a technical case. Somebody might say, Cameron, you know, I don't need a 50-day average. That seems like too much data. Maybe I want to see shorter-term trends. Well, you could customize this indicator. Just come back up to Edit Study, go to Simple Moving Average here, and edit that. And let's say we just wanted to look at the average price over the last 10 days. So this is going to make this indicator much more sensitive to day-to-day changes. We're looking at just a shorter-term trend. So what we'll expect to see is a more jagged appearance to the line. Let me click OK and click Apply and watch what happens to that line. Now we're getting a much shorter term trend, and you can see that thing shifting more frequently and more dramatically. So this is an indicator that can be used to identify shorter term trends or longer term trends or intermediate trends. So let me switch this back to a 50-day chart. And if this is your first time ever seeing this sort of a thing, you might want to play around with this tool, okay? So if you're just trying to cement these concepts in your mind, what you might want to do is go to your paper money account, bring up 2 or 3 stocks, see if you can identify, just manually applying the Dow theory of trends, the higher highs and higher lows, lower highs and lower lows, see if you can identify the trend on a daily chart, on a weekly chart, and then to mix things up, add a moving average. See if that agrees with your trend identification, or if it brings something new to the table. Okay, let me switch this back, click OK, click Apply. But I think you can see how a technician might use a shorter term moving average if they're interested in shorter term trades, an intermediate term moving average if they're interested in staying in a trade for maybe weeks to months, a longer term moving average. They might even crank this all the way up to, who knows, 200 days. If we were to do that, watch what happens. We come back up to my beaker icon. Let's change this from a 50-day. Let's make it 200 days. There we go. You can see how slowly this will tend to change direction, how infrequently. But for a longer-term investor, seeing this tip up from a down slope to an up slope may mean for them on their stock that this is now shifting into an upward trend. All right, so we've looked at 2 different ways that you might identify trends. Doing it yourself manually or using an automated approach. It's a preference choice. I'm not saying that one is better than the other. It's kind of just a stylistic decision again here. But however you do it, if you're using this in your technical analysis, hopefully this has given you some greater visibility into the trend of a stock. But even in an upward trending stock, is there ever a bad time to buy? Look at ABB, Avalon Bay. Do you think anybody kicked themselves for buying the stock here or buying the stock here? We're going to be moving on next week to talk about attempting to optimize our entries within a trend. So we're going to be talking about price floors and price ceilings, support and resistance. That's going to be our discussion next week. But for this week, we got it done, got it accomplished. We looked at those 2 different ways to identify trends. We looked at that on multiple charts, on multiple time frames. I do hope that that was helpful for you. But I'm going to be setting you loose, but with an invitation to join us again in just a little bit, where we're going to be having a discussion called The Splash. That's led by Pat Mullally and Mike Follett. And they talk about ETF investing every Monday. So that'll be coming right up. Class, thanks for joining me today. I do hope that this was helpful for you. Hopefully you feel much more confident in the identification of trends. That was my purpose for this discussion. Remember that we did use real examples in today's discussion. It's not a recommendation or endorsement of those securities or strategies, and the usage of a stop is not a guarantee that you will buy or sell at a specific price. As I mentioned, next time we're going to be talking about support and resistance. In the meantime, keep your eye on the chat window. I just pushed out a link to a survey, very quick survey, 1 page, 5 multiple choice questions. If you haven't filled it out, I think it'll be a pleasant discovery. Very quick to fill that out, but we like to use that feedback to improve our webcasts. So if you would click that link right now, I'd certainly appreciate it, because I'm going to close things down. I don't want that link to be disabled before you have a chance to fill out that survey. All right, everybody, I will see you next Monday. Between now and then, I want to wish you the best of luck. Happy investing. Bye-bye.